What's up, everyone? 360 in the house. What is up? Hopefully you guys are excited. Welcome back to the 360 Elite Trading course. Man, I'm stoked. I'm pumped. We've had a lot of information. Y'all's feedback has been fantastic. I mean, I'm loving what you guys are learning. I'm loving that you guys are loving the learning. I can tell by what you guys are saying in the Discord channel. Hopefully you guys are enjoying the Discord channel. What a tool that has been for you all to bounce things off of each other, help each other, become that support community. I freaking love it. I love it. You guys are doing great in there. So this chapter basically tails on to what we've been talking about with risk and loss management. I really wanted to get back into stops again. This chapter is going to be on how to move your stops up to protect your profits. We talked about the initial stops, where to put those kind of things. But one of the questions I get the most is, well, how do I move that stop? How do I adjust that so that if I want to ride this train, because, we have multiple targets, on many of our trades, and some of you guys, you want to hit those higher targets. So how do you do that? But at the same time, how do I do that to get those higher targets, but still protect the profit that I have? And you do that by moving your stops up. But there's a science to it. There is a trick, a method. And it's not complicated, but most people do it wrong. And they do it wrong because of one key thing. And that is they fail to allow the market to develop a new support structure. Get that? You must be patient and allow, because you've just ridden that thing. It's just gone boom, boom. We got the booms going, baby. Everybody's excited. Woo! And some of y'all are like, oh, let me. If you're not selling that leg, if you're selling the leg, you're good. You sell that rally. That's what traders do, man. They sell rallies. But the ones that want to ride and wait for that next leg, you've got to know how to move those stops up. You must allow the market you've got to give it time so that it can develop a new support structure. If you blindly just, let's say your thing just shoots up 30% and you just move your stop up 28% because you think that's good, the odds that are you're just going to get stopped out, and you would have been much better just taking profits. So how do you do it correctly so that you can ride that next leg? The key, the secret, is to be patient. Wait for that trade to show you new market structure. And I've got to be honest with you, a lot of those structures, if you've gone back in history and this particular currency has already traded at these levels in the past, a lot of that structure you'll have already drawn out, because I've taught you. Zoom out, draw all of your trend lines, draw all of your horizontal price action support and resistance lines, and they will show up at the current levels where the price isn't yet. So you'll kind of already know. Now, once an item is making new highs, of course, you may have trend lines going up there, but you're not going to have horizontal supports. It's going to have to develop new ones. But for things like Litecoin, right here, we have Litecoin on here. And we're going to start down here at the bottom as if we were trading this, pretending that none of this exists up here. However, these lines, these horizontal lines, and look at these trend lines coming out of seemingly nowhere. They come from historical price action, historical data. So even though they look like they go into the wild blue yonder and there's no price there, you will see time and time again, they are the secret to knowing those target levels, man. The secret to knowing where this thing's going to hit. What's next? This is the secret. You drew these lines from history, and now they're showing up in the present and makes you look like a magician, man. Woo! Incredible. So, to move your stop up, you want to wait for that price to establish new support structure. It doesn't happen instantly. Sometimes it can take hours or days to set that up, which we're going to find out here in just a minute. So the key to know is that the other cool thing is we are in a known bull market cycle. So we know that until we hit the parabolic move, everything is going to make legs, climb, make new legs, consolidate and pull back and create new market structure. Since we're still in the bull market cycle, what's coming up after the market structure? New legs up. New legs up. Because you know this, because you know the bull market cycle of cryptocurrency, this is the one thing that you can't get in stocks. Man, a crash can come at any time because there's no cycles like we have with crypto. Man, it's just incredible, an incredible way of making wealth because we have these known bull market cycles and we are literally slap dab in the middle of one that could literally progress until 2022. At the very least, until we have the parabolic portion. But until then, man, we can ride these legs, wait for those pullbacks, those consolidations, define those new market structures, move our stops below those new market structures of support. Common sense. It's brilliant. It's the secret. And it keeps you from getting slapped out of your position early when you wanted to ride the next wave. Now, if you do get slapped out of it or you do get stopped out of it, all you got to do is use our trading strategy to determine your new entry. So you're still not out of the game. You just happen to get stopped out of that trade at profit. At profit. So the key with crypto is knowing that you're in what's part of the cycle you're in, allowing that currency to form a new structure of support, allow for volatility. That's the other different thing in crypto, man. There are massive swings of volatility. That's just how it is. So you have to give those stops room to breathe. You know, in stocks, a lot of times they would look at the stops and where we put them and say, man, that's just, you're taking on too much risk. But in crypto, you kind of have to keep yourself from getting stopped out. If you play your stops tight to the chest, tight to the trade, I'm telling you, you're going to get stopped out. It's just going to happen. So you have to accept the risk of volatility in crypto and know that you're going to have to accept a little bit more risk with your stops. It's just the nature of the beast. Now, when we're trending or this item is trending, we can play it a little bit tighter. But in pullback consolidation mode, especially when Bitcoin's pull back and consolidate, we have to give it room for that volatility. You just have to if you want to stay in the trade. If you want to stay in the trade, you have to accept that risk. So let's take a look right here at Litecoin. We're looking at this bottom structure right here. None of this exists. We're pretending that this is the trade here. So we basically were in somewhere in here, and we're going to pretend that it broke out. We have this horizontal line right here. As you can see, we have it. We have already drawn it, established it as resistance here. Now it's support here, providing support. Broke down below, and then this is when the bull market really started. So people bought. If they bought in this level, you'd have drawn a level here. Boom, right in here. So you were looking, maybe you entered right in here on this, but either way, let's pretend you got in this trade right in here. You got in this trade right in here. And then it rocketed up and broke through. You had a breakout here. So if you were trading this, you got in somewhere in here, anywhere in this area, and you were riding this and you got this breakout. And it broke out and you're making money, okay? A lot of traders started selling right in here. Started selling, but you wanted to wait. You wanted to ride this, you wanted to keep this going higher, then you need to wait for this to establish structure. Now you would already have this line drawn across. You would already have this. That's how you got this breakout. That's how you identified this as a breakout. Maybe you entered here. Boom, and you rode this breakout. Now, you want to wait for this before you just move your stop up in here. Before you just follow this with a trailing stop because you want to ride this up higher. You need to let this establish support. Let it establish support structure. And look, imagine that. A lot of breakouts are what? Retested as support. Sure enough, it was retested and bounced off. Once you saw this action, retest, bounce, we have a bullish candle here and we're headed higher. You can then move your stop right below this structure. So if we drew our line, you can see over the right, it says right here at the line 51.62. I just put mine at 51, probably about 50, 80. So somewhere below here, 50.75, 50.80. Somewhere below here, you don't put it at that area because it could come back and retest it again. So you would have moved your stop below this horizontal line. Now, we have price action here, so you continue to draw your price structure. Now now that I have 2 points of contact, remember you need at least 2 points of contact for a trend line. I can go ahead and draw this puppy out. Remember, none of this exists. None of this exists because this is our trade. So now we're riding this. We have our stop here. We're riding this up. And whoa! You will have already drawn this up as resistance. It broke that resistance. Now, you have this as support, but don't immediately move. Don't immediately just set your stop there. Even though you have a line, don't immediately draw it there because look what we have also drawn. We also have this structure. Now, this hasn't hit it yet because you're right here. So you let this establish support. This is a wick that stopped out once it came down here. This wick stopped out everybody that had stops in here. Be patient. You have already drawn this line. Of course, a breakout again came back and tested as support, but it wicked out people that had their stops under here. The patient waited for this to develop and bounce and show signs that this was true support. Now look what came into play. Double support structure. A trend line meeting at the same place as a horizontal line. Now I'm going to place my stop right in here. So the line has this at 69.20. 69.20 is where this line is. I'm going to put my stop at 69. I don't have to worry about this anymore. Why? Because this is where people got stopped out on a stop sweep. These are wicks. They were reaching for anybody that had their stops below this line. They got them stopped out. We were patient to wait for that to develop. And now we have this beautiful bounce. Now I'm moving my stops to here. To about 69 bucks. And look how beautifully that would have worked out. We waited. We have two supporting structures, a horizontal price action support and a trend line support. Look at this happen again. Now we got a new breakout. Traders that were looking for this target sold it. You might have been one. But if you didn't, look what happened. Pull back. Imagine that. The breakout retested again. This happens over and over and over repeatedly. When you get a breakout, 9 times out of 10, that breakout is going to come back and retest it as support. You are smart enough to wait for that to occur. And then, boom, once you got this action right in here, you would then move your stop from here up to here. Now, you still see this trend line. You still see this trend line. However, this is no longer working right now, but I keep drawing that. Based on this price action and this bullish action, breaking resistance up here and moving higher, I can go ahead and move my stop up to below here for now. Everybody see how that develops? I've let this play out, and then I have this beautiful bullish action. Beautiful bullish action. Before we get another breakout from historical, this is a historical line. This isn't coming from nowhere. This has already been pre-drawn, so I already have it as a target. Boom, broken through. People are selling this. People are selling this. Anyone who moved their stop up initially, look what happens. Comes back, retests, breaks through. This is wicking. All of these stops that we're placing here has been wicked out. All of these stops have been wicked out before finally establishing a more solid, a more realistic support. So I could then draw this right in here. Here's the resistance, broken, support, stops wicked, stops wicked. If you would have moved up here off of this, and a lot of you probably would have got stopped out. That's okay. That's okay. Now I want you to look at how I have to modify my trend lines now. I'm noticing that this is no longer really playing up much. It doesn't really play up much. So this can be adjusted. You will see how this same line can be adjusted. As you can see, and tightened. This would be a false breakthrough of that. However, by continuously adjusting my trend line, look what happens. The trend line works again. It works and coincides up here with support, and you can see it come into play over and over. By adjusting, constantly adjusting that line for future trading, look how this is played out. Look how this is played out. And again, giving you solid support structure to continue to move that stop up. Let that support structure develop. Give it time to play out. I want to talk about those stop seeking wicks. And of course, we have a beautiful one to do that with Cardano, which we mentioned before. So let's draw some of our horizontal lines and see how those played out. Let's draw these up here. All right. So again, we have these breakouts. I'm going to get some arrows so you can see them. This is very important for you to understand how crypto world works. Now let's make copies. Let's get a bunch of these so you can see them. Let's get this one down here. I want you to see these guys. And you'll see them again and again and again. Especially on Cardano. You won't see them for all of them, but you will see them for a lot of them. This is a reason why you should be patient. This is the reason why you should be patient before you put your stop in. So if you had gotten in this down here, I want to show you this. You were riding this consolidation. Maybe you entered this consolidation up in this breakout area. Your stop would have been where? It would have been below this line down here. You rode this. A lot of people sold this. If you were a swing, like looking for quick profits, maybe you sold this. You did a great trade. But if you were swing trading this and you moved your stop up to below this line, look what happened. You didn't wait. This is completely a stop search wick right there. Now, once you saw it and it happened, now you let this structure play out. You let it play out, and then you realize, oh, okay, I can actually go ahead and move my stop up. Because we have a new structure. So this is wick territory. I don't really have to worry too much about that wick territory once this completely develops. So I would move, once I have this play out, I would move my stop up to this area below this first line, right in there. So I would move from here to right in here. I've let this structure develop and play out. Look what happens. Boom, baby. Now, if people taking profits here, a lot of these people that didn't take profits have their stops lined up all in here. That's what this candle's all about. This is the market maker taking out all those stops. If you would have waited patiently and waited for this candle, look what happens. We can now draw new support. We waited, we let that play out. Look what we got, new support. Once we see this develop, we can move our stop from here on up to here, right below here. We can disregard this wick because it's already been wicked out. And I can move my stop up to here. I am now ready to ride this train. It takes patience. I can ride this now because my stop is here and I get to take advantage of another great trade. I'm riding this puppy. This is how you ride these levels. Boom, all the way up here, all the way up here. If you would immediately, this is taking out all these people that moved their stops up. But patient traders waited for that to develop. Waited for that to develop. And then once you saw that bullish candle, you let that develop. You saw a bullish move. You know now you can move your stop below this action. And look, another wick that you would have been protected from by moving your stop up. Because you would have moved your stop up right below this line. That is basically how it's done. So now you get to see how the market develops structure. Watch for those stop wick candles. You'll see them because they'll be steep, long candles that will wick people out. Let those develop. Then watch how that consolidation develops over time. Then draw your support line. Then move your stop up below that support line. And man, you can ride the train over and over and over again. Does that mean you'll never get stopped out? No, it's not a perfect science. However, by using your trend lines, by using your horizontal price action lines, by watching for those wick candles, letting it develop, giving it time to show you new support structure. Why? Because you know what's coming next. You know another leg's coming because we're in a known bull market cycle. You can take advantage of this time and time again. I want to show you one that's really clean but rare. Look how clean this action is. This is a money trade, and you guys know I have this trade out. This is dumb trading. It's so dumb, and yet it makes you so much money. I mean, this guy moves literally 100%. This is a 100% move right here. And again, another 100% move. 100%, 100%, 100% gain with absolutely sexy consolidation of accumulation in between. I mean, absolutely stunning. You would have waited on this for this, let this develop. You got a stop wicker here. But once this finishes, you would know I can go, because you already have this line drawn because it was resistance before. So give it time. Boom. It is now developed. The odds of this going back below here or this trend line are slim to none. So based off of that, I know I could play my stop. This is probably going to keep coming over here till eventually skyrocket again for another 100% move. I mean, this is so pretty. If you can't see this, usually they're not this clean, but I wanted to show you District OX DNT for the reason of how clean it is and how a patient trader can make money time and time and time again. You could have ridden this 100% move, 100% move, 100% move. You could have taken this from 5,000 to 10,000, 10,000 to 20,000, 20,000 to $40,000. That's right, in 3 trades. And you guess what's coming next? I mean, look at the lines. Guess what's coming next? I mean, seriously, you're talking about 20 to 40 grand on the next move based on historical probability and using your trend lines and moving your stops up. Wick candle, waiting for that wick candle. Boom, I'm good now. Waiting for that wick candle. Boom, I'm good now. Draw my support and play that puppy over and over and over again. The key is to let the market form that new structure of support. Most people that play their stops are hasty. You cannot be hasty in crypto. This is not the stock market. There are wick candles that seek stops exist over and over and over again. At the very least, breakout areas will be retested as support. At the very least, let that stuff happen. Let it play out. Be patient. Stop operating off of fear and panic and greed. Make money. Boom, baby.